Hello and welcome to the video. Today we're discussing Bitcoin dollar resistance at 14k and whether there are other resistance levels to be aware of before Bitcoin reaches 14k. We'll also talk about some monthly timeframe trading tips as well as where to position for a pullback if the market offers one. Let's not waste any more time and get straight into it. If you prefer the shorter intros, make sure to like the video and subscribe to the channel. I know it sounds like an automated message at this point, but it does help us a lot, and it's a great way to support the channel. Let's go. So, monthly time frame is where I think these levels are clearest, and where the points can be made most succinctly. So the upcoming 14k resistance level, which you've probably seen, where does it come from? For me, it's this highest close on the monthly time frame, which lands at 13,800, depending on your exchange and data feed, but you can immediately see that it is also aligned with the swing high, or the highest high made in the previous high time frame trending rally. So some significance there pretty clearly. Another monthly level that I'd like to add, and that will make clear some of the points I reference in this analysis, is the recent monthly support resistance flip at 10.7. Yeah, the break of that level, again, highest close, so those levels or these structures are somewhat analogous. And most recently, we had the close above the level, 1 month above it, second full month above it, and now we're finally getting the impulse move from the level. Immediately, we can make sense of two things that will inform us of our trading should price reach 13.8k. Those two things are time and price. So with regard to time, if we look at this technically, the market was bullish at 10.7 all the way back here, when we had the first close above it. Okay, so that's when, from a high time frame point of view, longs were favorable. And if I hover over this candle, you can see that the close was at 11.3. That's when, from a high time frame point of view, we've got a resistance, break of resistance. That's typically valid for a bullish bias. However, it wasn't until one full monthly close after, and then another full monthly close after, only after the conclusion of those 2 full months, not counting the close above, and then almost 3 weeks into the next month, which is where we are now, did price rally from this level. So there's no guarantee that high time frame resistance is broken, that's it, we're going to moon now. Sometimes it works that way, but other times you may have to stomach 2 months of either chop, consolidation, ranging, whatever, before the high time frame idea comes to fruition. If you have fantastic patience and discipline, that's absolutely fine for you. In this case, there's no bearish close at 10.7, so there was no fake out to contend with, but it's very easy to lose conviction and lose sight of the bigger picture if you're stuck in the same position in perhaps over 2 months, coming to 3 months, without getting that impulsive high time frame move that one was looking for. Another thing which makes this more difficult, but which helpfully informs our perspective for the next level of resistance, is how significantly price can violate these high time frame levels while still being valid. Okay, so in this instance, at 10.7, the price action looks pretty unambiguous, right? Break above, retest, go higher. But textbook technical analysis. However, if we just look at this more closely, and again, we are dealing with a monthly time frame here, if we look at the lowest low made during this retest phase, you can see that we went all the way down to 9,800, which is almost $1,000 below the so-called support level at 10.7. And if we look at the highest high made without the actual breakout, it was at 12.5k. So without the market moving anywhere and prior to putting in this trending higher time frame leg, we went all the way to 12.5 without breaking out and moving without breaking out of the range, and all the way down to 9.8. So in both instances, while the high time frames are still straightforward, like, yep, closing above 10.7, the market's bullish, you have to deal with this swing up to 12.5, down to 9.8, and still stick to your idea of 10.7 support to 14k resistance. That's really hard to do, and it's easy to look at it in hindsight, TA, monthly close, etc. But if you're actually there putting money on the line, trading these ideas, this is one of the things that makes high time frame trading difficult. Yes, you get fewer but arguably clearer signals, but at the same time, the noise is also much louder. I mean, even if we take the downside example, the lowest low made on the retest at 9,800, price is essentially $1,000 below your level of support, and you still have to kind of stick to your guns and believe that it's going to hold until the monthly close says otherwise. It's pretty hard for a market to tank through your level by $1,000 and for you to sit there and think, well, it's still support because the monthly hasn't closed below it. Not everyone is built for that. So taking some of those lessons about time and price at high time frame levels into the next level at 14K, what can we infer, or what are some reasonable conclusions to come to? Well, going back to time and price, the first thing is to do with time. Now, is there a law or some sort of guarantee that the market won't, for example, just spike the level and then react immediately? Absolutely not. That can totally happen, right? However, my view is you should at the very least be prepared for the market to significantly overextend through the high time frame level and set some sort of wick or blow-off type of price action, right? The end of a local trend, whatever it may be, before arguably settling closer to the level itself. The 9.8 at the 10.7 level is a really good example of that. You got the extreme at the level was pretty extreme, right? Almost $1,000 swing to the downside, but the closes and the settlement of that same price action on the high time frame closing basis, which was much closer to home. And you'd be forgiven if, when the market was 9.8, you'd be forgiven for doubting or having some reservations about 10.7 acting as support. We can apply the same logic, in my view, to the level of resistance, whereby we can have the market rally much higher than 14K or 13.8K and go to mid 14K, 15K, whatever it may be, and you'd be forgiven for thinking that that's it, this is the breakout that's going to take us to all-time high, but instead for the market to actually pull back and settle somewhere closer to 14K and the level itself. So the reasonable question to ask yourself, should we trade to this level and start breaking significantly above it, is, am I buying what may end up being the high time frame wick at resistance? The monthly time frame has been quite generous recently and didn't offer any fake outs or failed closes, etc. So this consideration is worth being aware of if the market trades to 13.8K. So revisiting those conclusions, number one is in terms of time. There's no guarantee that the first breakout through 14K or 13.8K, if we reach there, is going to be the one that takes price to 10 million, right? There's a non-trivial chance that even if we get bullish price action above the level, that we actually have to spend a bit of time closer to resistance itself before breaking out. Even more radically, is it that unreasonable to entertain the idea that we've got monthly support at 10.7, right? Oops, let me just fix this really quickly. We've got monthly support at 10.7. We've got monthly resistance at 14K. Is it that unreasonable to argue that we may get some sort of range or some sort of consolidation between these levels on a high time frame before the market decides which way to trend? These are all scenarios to be reasonably prepared for, and that shouldn't be terribly surprising. So that's the thing about time. The second point about price, as discussed on the monthly time frame, is only if we break. Let me rephrase that. The act of breaking above 14K is not by itself a guarantee of moving towards all-time high. Just like price trading below 10.7 and reaching levels significantly below it was no guarantee that support was broken, we can expect similar, or we shouldn't be surprised by similar price action at resistance, whereby we get price action which makes it look like that's it, the level's over and the market's about to reverse, but actually ends up being the wick before pulling back closer to structure itself. So that's the point. First point about time, and second point about price. Don't buy the wick. So those are just some thought experiments at best to do with these monthly levels, but let's look at the other question, which is there any resistance before reaching those levels? For me, there are a couple levels to be aware of. This one comes from the daily time frame, and it's the highest daily close in this consolidation, which lands at around 13K. And looking at the market reacting to these daily levels right now, it is currently acting as support. So I suppose short-term technical analysis at the time of recording, as long as 13K acts as support, I think the more likely route for price is towards resistance at 14K. Okay, that's simply with where the market is positioned with regard to high time frame levels right now. One thing to note is that this trending leg hasn't had a high time frame pullback. It doesn't have to. It's very common, at least for Bitcoin, when it trends. By the time you get the high time frame pullback, the market's already gone leaps and bounds. But when we broke above 10.7, for example, you got consolidation into a leg higher. There was no pullback to this level as well. In the same vein, we had high time frame resistance at around, let's say, 11.5 or 12k, whatever. Very similar price action. You got the closes above the level, and then the market just put in that leg higher, which took us to 13k. So high time frame pullbacks aren't mandatory, but definitely worth being aware of. So with that framework in mind, if this 13k to 14k plus idea fails, and that would mean support at 13k breaking, where can one reasonably expect pullback? So where would it make sense for the market to pull back in terms of structure? I think there are two levels, one of which makes much more sense to me than the other. The first one is the one nearest to market, which is this highest close. Maybe we can even use the wick and take some liberties, which falls at around 12.4k. Okay, that's kind of the resistance level or the highest close in this old range. It's been broken and then would be expected to act as support should the market pull back in one way or another. I don't prefer this level. I don't like it very much. Could the markets, kind of wick here and keep going higher? Sure, but I think there is a better level that's available. And that's the top of the old range, closer to 12k, which for me is the highest close here. Okay, it lands at around 11.9, or I'm sure you can look at your own data feed. Why do I prefer this level? Well, for me, the high that we delineated as the nearer support wasn't as significant as this high here. If we look at where resistance was within the range, it was closer to the level we've got right now, and this circled area, which could arguably be support, looks to me more like a failed breakout attempt, right? You've got real resistance, above, below, fails, and then we've got real resistance back at the level again. Okay, so that's why I kind of give that more weight. And also, just in terms of market structure, there's another point to be made. I've delineated this area using the highest close here, and this was the high which preceded this leg down on the daily time frame. And that is important because it is after this high that daily market structure was broken. You can see during this range you have at least equal lows, if not slightly higher lows, right? And then once this high or swing high was formed, the leg which followed broke market structure, right? You've got equal lows or higher lows, highest close into a nuke. And so that nuke level should have been resistance on the way up. Instead, the market rallies into it and then bursts through it. So it's expected to act as support if the market pulls back to it, and that's what makes it a slightly more attractive level than the high which extended through the top of the range originally. So where does that leave us if we put everything together? Okay, and let me just delineate this level as well. Well, currently, with where the market's positioned right now, if support at 12.9 persists, certainly on a daily close basis, the next high probability objective is the monthly level at 13.8k. And for reasons discussed, while it's plausible, I don't expect this to be a kind of tap the level and reverse sort of deal. I really think if we start trading towards that high time frame monthly swing high, there will be some overextension through the level itself, even if then the candle close ends up being slightly closer to the level. Okay, so that's the sort of, from the available evidence, as long as this continues to act as support, A to B is plausible, reasonable, whatever I'm hedged adjective you want to use. What about a high time frame pullback? And I'm sure some of you are thinking, oh my god, I've missed so much of this rally. It's just been going straight up. Where do I go? Or where is support? One of the more difficult trades and trades you don't want to get stuck in is buying kind of thin air or buying the first small leg in what's actually a high time frame pullback. So for me, a meaningful high time frame pullback with well-defined structure would involve, first of all, the break or loss of support at 13k, and then that pullback to reach this daily highest close level closer to 12k itself. Okay, here. So that's Bitcoin. We've talked about reasonable expectations at monthly levels. where the market is right now in terms of the nearest level of support, which could turn to resistance if it fails, and then in terms of being prepared, both with price action above monthly resistance, but also on pullbacks. I think for the market to look good and continue higher after the first real corrective leg, given how we haven't arguably, well, in my view, we haven't had a good one yet. The level which needs to hold on a high time frame basis is this 12K area, should we get that sort of pullback. That's all I've got. Hopefully that roadmap is of some use. Make sure to like the video before clicking off. Really does help us a lot, and subscribe to the channel. A quick reminder, if you ever want to engage, ask questions, or see more of this type of stuff, we are live every Monday, Wednesday, Friday at 7 UTC on this channel, and we'd love to have you tune in. Thank you very much for your support, and happy trading.